Good morning, everybody. It's Thursday, October 26th, 5:30 a.m. Central Time. Mixed to higher trade in the grain markets this morning. December corn futures down a quarter cent at 479 and three quarters. January soybeans up a quarter at 1308 and three quarters. December Chicago wheat up 4.5 at 573. December Kansas City wheat up two and three quarters at 651 and three quarters. December spring wheat up 4.5 at 725 and a quarter. We had some news from USDA yesterday.
So the USDA will provide $2.3 billion to develop and maintain international trade and bolster international food aid. $1 billion will go towards global hunger, and the remaining $1.3 billion will create the Regional Agricultural Promotion Program and help specialized crops diversify their export markets. The fiscal year 2023 trade deficit is $19 billion, and the USDA projects it will grow to $27.5 billion in fiscal year 2024. Research has shown that for every dollar invested in developing export markets, exports increase by $24.50.
That must be government research, I would imagine. So 2.3 billion in total, but 1 billion is going toward global hunger, which is kind of vague here in terms of exactly what that means. 1 billion to help address global hunger. I don't think there was anything in this press release beyond that. And then the additional 1.3, specialized crops diversify their export market. So I suppose if you're involved in small grains or something like that, maybe this could help you out. I think the world is well aware that we grow corn, soybeans, and wheat and export those products. The fact of the matter is we're just overpriced versus our competition right now for a lot of reasons. Big crops overseas, logistics issues, river issues, all of those things. So this is a nice thought. Throw money at the problem, right? I just don't know if this is going to result in anything of material value for any of you guys.
U.S. ethanol production increased last week. Weekly output of 1.04 million barrels increased slightly compared to the prior week and was up 2.4% versus the same week last year. Ethanol stocks were pegged at 21.4 million barrels. The print increased 1.4% on the week, but declined 2% compared to the same week last year. Implied gasoline demand decreased marginally compared to the previous week, but was up 2.1% versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is down 2.4% versus the same period last year.
This is good stuff. It's a good number. Ethanol production margins are very good. So I think that production should stay strong. I know that some ethanol producers, actually in a lot of areas of the country, have had to bid up for corn in terms of basis bids because, the farmer's not interested in selling here, generally speaking. You're below production costs. And the way that they'll get some corn bought is through a basis push. And we're seeing a little bit of that. In terms of U.S. demand, most of you guys know this, but ethanol is projected to account for 37% of all usage of corn grown in the United States this year. And that's actually a number that at the end of the day could get larger simply because your export piece may not be as large as what the government has indicated. So ethanol is always a big deal. It's usually more of a static item year over year in terms of production. We're pretty steady. Exports is the one that really moves the needle in a lot of years. It's only 14% of total demand, but exports is the one that can kind of swing around and really change the balance sheets a lot, whereas ethanol, feed usage, or other stuff, they don't necessarily move as much as exports do.
So if you guys have not already checked out our premium content, you need to do so. Joe, can you tell me about the video you put together with Brian Split yesterday?
Brian comes on every 2 weeks and we do charts, and there was some super timely stuff as it relates to the cattle market and feeder cattle market in particular yesterday. We also ran the corn and soybean charts, which were admittedly not as exciting because we've been kind of in bear market, sloppy trade territory here as of late. If you guys want to see all the premium stuff, go to standardgrain.com. You can sign up this morning. You'll get our morning email that goes out every business day at 5 a.m. Central Time. You'll see all the premium videos. If you sign up this morning, I'll send you over a copy of this morning's email. It includes the 6 most recent premium videos. And the email also has a whole bunch of charts and graphics and all sorts of other stuff that we don't show you here on YouTube. This is a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. It takes like 1 minute to sign up. You can do it on your phone or computer. Just need your credit card. Check that out this morning, guys.
Rainfall over the vast majority of Ukraine has improved winter crop conditions. Prior to the recent precipitation, Ukraine was dealing with widespread drought. Earlier this month, Ukraine's ag minister even forecast a drop in winter wheat acres due to the dry conditions. Ukraine is projected to harvest 79 million tons of grain and oilseed this year.
There was some news across the wire just this morning at about 4 a.m. Central Time. This was not from the government. This was from some consulting group, but Reuters was reporting it. Ukraine suspends new Black Sea grain corridor due to military risks. I don't know if this is real or not. I suppose you guys will find out later today, but the markets exhibited essentially no reaction to this. To talk about Ukraine in general, a lot has changed since the invasion. So compared to their pre-invasion peaks, Ukrainian corn production should be down 34% this year. Wheat production expected to be down 32%. When you look at global export share, Ukraine is slated to be the world's fourth largest corn exporter this year. They'll account for 10% of all global corn exports. And as a matter of fact, we have, I suppose, lost some corn business to Ukraine as of late. Ukrainian corn export pricing is below what we can offer out of the U.S. China bought some Ukrainian corn a couple weeks ago. We talked about that in one of our videos. As it relates to wheat, Ukraine is projected to be the world's ninth largest wheat producer, only 5.3% of all global wheat exports there. So I know when people think Ukraine, they think about wheat immediately, and I think that's because of what happened following the invasion. But this is actually a bigger deal for corn. I mean, they're 10% of global corn exports, only 5.3% of global wheat exports. Interesting nonetheless. And their weather has, before I jump to the economy, their weather has improved. They've caught some rains, and there's more rain in the forecast. I was looking at the models this morning, and they're going to catch some more rains, more so in the northern areas. It's not perfect, but it looks better.
Third quarter GDP is projected at 4.5%, the fastest pace in almost 2 years. If realized, GDP will be double the pace seen during the first half of the year. Consumer spending is responsible for the surge in economic growth. The Federal Reserve may need to hike interest rates further if this level of growth continues. The majority of economists, however, are anticipating that economic growth will slow during the last 3 months of this year. The report will be released here this morning at 7:30 Central Time.
4.5% GDP is not recession territory. In fact, it's the exact opposite. I know there's a lot of doomers and gloomers out there, and everybody thinks we're headed for a recession. But the labor market, these GDP statistics, they all indicate the contrary. Economists, however, are forecasting economic growth to slow. There was a point there in 2022 where economists said there was like a 99% chance of a recession. And then it went down to 80%, and then it went down to 50%, and now they don't have a damn clue. So I wouldn't put too much stock in what the economists say about the future. Just know that you're probably going to see a pretty decent looking GDP print this morning, which puts the Fed in a very tough spot because the Fed wants to hurt the economy. They don't say that, but that's what they want to do, and they've been unable to do it through their rate hikes so far.
USDA reported a flash sale of U.S. soybeans on Wednesday. U.S. exporters sold 126,000 metric tons of soybeans to China for delivery during the current marketing year. Accumulated soybean sales for the current marketing year are down 31% versus the same period last year.
That's not even a routine number. That's a less than routine number. The routine number for China is 132, and this is 126 for some reason. In any case, export sales of soybeans are not where they need to be. We had this ceremonial fake purchase signing in Iowa on Monday, and in past years, those had resulted in big purchases ultimately, but we have no evidence right now to suggest that that will be the case anytime soon. We do have an export sales report this morning at 7:30 Central. Sales for the current marketing year expected: corn 600,000 to 1.2, soybean 750 to 1.5, wheat 300 to 600. What did the cattle markets do yesterday?
Cattle futures were able to stay in the green finally on Wednesday. Feeder cattle futures closed an average of $1.47 higher. Live cattle futures closed an average of 60 cents higher. Box beef was mixed. Choice ended the day at 307.50. That was up $1.52. Select ended the day at 281.66. That was down $2.34.
A little bit of recovery. Hey, guys, remember November grain options expire tomorrow. If you have any remaining open positions there, take a look. Outside markets this morning, U.S. dollars up a little bit. Stocks are off. The S&P's down 25. The Dow's down 100. Bonds are flat. Crude oil is down $1.06 in the December WTI at 84.33. Have a great day, guys. We'll talk to you Friday.